Hello, world. Welcome, I am your host Mr. Stag. Today we will be discussing the Charles Schwab Corporation, ticker symbol SCHW. The Charles Schwab Corporation is an American multinational financial services company. It offers banking, commercial banking, an electronic trading platform, and wealth management advisory services to both retail and institutional clients. It has over 360 branches, primarily in financial centers in the United States and the United Kingdom. It is the 9th largest banking institution in the United States with over $7.57 trillion in client assets as of July 16, 2021. It had 29.0 million active brokerage accounts, 2.1 million corporate retirement plan participants, 1.5 million banking accounts. Charles Schwab is the third largest asset manager in the world, behind BlackRock and Vanguard. The company was founded in San Francisco, California and is headquartered in Westlake, Texas. Founded as Charles Schwab & Co. in 1971 by Charles R. Schwab. Charles Robert Schwab was born July 29, 1937, is an American investor and financial executive. He pioneered discount sales of equity securities starting in 1975. His company became by far the largest discount securities dealer in the United States. He retired as CEO in 2008, but remains chairman and is the largest shareholder. Schwab was born in Sacramento, California, the son of Terry and Lloyd Schwab. He attended Santa Barbara High School in Santa Barbara, California, and was captain of the golf team. He attended pre-college school at Holy Rosary Academy in Woodland, California. Schwab graduated from Stanford University in 1959 with a Bachelor of Arts in Economics. In 1961, he graduated from Stanford Graduate School of Business with a Master of Business Administration. In 1963, Charles R. Schwab and two other partners launched Investment Indicator, an investment newsletter. At its height, the newsletter had 3,000 subscribers, each paying $84 a year to subscribe. In April 1971, the firm was incorporated in California as First Commander Corporation, a wholly owned subsidiary of Commander Industries, Inc., for traditional brokerage services and to publish the Schwab Investment Newsletter. In November of that year, Schwab and four others purchased all the stock from Commander Industries, Inc., and in 1972, Schwab bought all the stock from what was once Commander Industries. In 1973, the company name changed to Charles Schwab & Co., Inc. In 1975, the U.S. Securities and Exchange Commission allowed for negotiated commission rates and Schwab set up a stock brokerage. In September 1975, Schwab opened its first branch in Sacramento, California, and started offering discount brokerage services. In 1977, Schwab began offering seminars to clients, and by 1978, Schwab had 45,000 client accounts total, doubling to 84,000 in 1979. In 1979, Schwab risked $500,000 on a back-office settlement system called Beta, which was short for Brokerage Execution and Transaction Analysis, enabling Schwab to become the first discount broker to bring automation in-house. In 1980, Schwab established the industry's first 24-hour quotation service, and the total of client accounts grew to 147,000. In 1981, Schwab became a member of the NYSE, and the total of client accounts grew to 222,000. In 1982, Schwab became the first to offer 24/7 order entry and quote service. Its first international office was opened in Hong Kong, and the number of client accounts totaled 374,000. In 1983, Stephen McLin purchased the company for Bank of America for $55 million. In 1987, management, including Charles Schwab, bought the company back from Bank of America for $280 million. In 1991, the company acquired Mayer & Schweitzer, a market-making firm, allowing Schwab to execute its customers' orders without sending them to an exchange. In 1997, it was fined $200,000 for failing to arrange the best trades for its customers. The unit was renamed Schwab Capital Markets in 2000. In 1993, the company opened an office in London. In 1995, the company acquired the Hampton Company, founded by Walter W. Bettinger. In 1996, web trading goes live. Customers can trade listed and OTC stocks, or check balances and the status of orders on the Schwab.com website. In 1998, dissatisfied by the in-house results, the company hired interactive firm Razorfish to redesign the website. In 2000, Schwab purchased U.S. Trust for $2.73 billion. In 2001, less than a year after the acquisition of U.S. Trust, the U.S. Trust subsidiary was fined $10 million in a bank secrecy law case. It was ordered to pay $5 million to the New York State Banking Department and $5 million to the Federal Reserve Board. On November 20, 2006, Schwab announced an agreement to sell U.S. Trust Division to Bank of America for $3.3 billion in cash. The deal closed in the second quarter of 2007. In January 2004, Schwab acquired Soundview Technology Group for $345 million to add equity research capabilities. David S. POTTRUCK, who had spent the majority of his 20 years at the Brokerage as Charles Schwab's right-hand man, shared the CEO title with the company's founder from 1998 to 2003. In May 2003, Mr. Schwab stepped down, and gave POTTRUCK sole control as CEO. On July 24, 2004, the company's board fired POTTRUCK, replacing him with Schwab. News of POTTRUCK's removal came as the firm had announced that overall profit had dropped 10% to $113 million for the second quarter, driven largely by a 26% decline in revenue from customer stock trading. After coming back into control, Mr. Schwab conceded that the company had lost touch with our heritage, and quickly refocused the business on providing financial advice to individual investors. He also rolled back POTTRUCK's fee hikes. The company rebounded, and earnings began to turn around in 2005, as did the stock. The share price was up as high as 151% since POTTRUCK's removal, 10 times since the return of Charles Schwab. The company's net transfer assets, or assets that come from other firms, quadrupled from 2004 to 2008. Schwab's Yield Plus fund drew controversy during the 2007 financial crisis because of its -31.7% return. Investors in the Schwab Yield Plus fund, including Charles Schwab himself, lost $1.1 billion. Schwab closed the Yield Plus funds in 2011. In April 2007, the company acquired the 401k company. Charles Schwab remained executive chairman of the company and said in a statement that he would continue to serve as a very active chairman. In 2011, the company acquired Options Express. The company also acquired Compliance 11, Inc., a provider of compliance software. In 2012, it acquired Thomas Partners, an asset management firm. On July 1, 2020, the company acquired Wasmer, Schroeder & Company, an independent investment manager of fixed income in separately managed accounts with $10.7 billion in assets under management. On May 26, 2020, the company acquired USAA's investment management accounts for $1.8 billion in cash. In June 2020, the company began allowing investors to purchase fractional shares. On October 6, 2020, the company completed the acquisition of TD Ameritrade, which added 14.5 million accounts with $1.5 trillion in assets. On January 1, 2021, the company moved its headquarters to Westlake, Texas. As of May 2021, Charles' net worth is estimated by Forbes to be $10.6 billion, making him the 210th richest person in the world. Charles Schwab's current stock price at the time of this video is $82.11 with a market cap of $155.24 billion. The stock is currently overvalued according to Simply Wall Street by 6.3% with a fair value price of $77.22. The company has a P/E ratio of 31.3%. SCHW currently pays a 0.9% dividend and it has a payout ratio of 27%. Earnings per share of 2.62, a gross margin of 96.75%, a net profit margin of 27.58, and a debt-to-equity ratio of 55.3%. The company's earnings growth has been strong compared to the industry. Charles R. Schwab owns 6.5% of Charles Schwab Corporation. With retail trading continuing to grow and the acquisition of TD Ameritrade, Charles Schwab Corporation will have steady growth over the years to come. Tell us what you think about the future of Charles Schwab in the comment section below. Mr. Stag logging off.